Whoa, okay, did you see that market action today? I mean, the S&P 500 dropped over 1%, the Dow almost 2%,
Yeah.
and the VIX, the fear gauge, spiked over 15%.
Huge jump.
This wasn't just a little wobble, it felt like a pretty significant pullback. Seems like a mix of global tensions and maybe some data that surprised people.
Uh-huh.
Stick around because we're going to dive into exactly what triggered this sell-off, look at the crucial price levels that broke, maybe some you were watching yourself, and try to figure out what it could mean next. Hey, real quick, if you find these daily summaries helpful, seriously, hit that like button. It takes 2 seconds, doesn't cost a thing, but it helps us out immensely.
Yeah, it definitely helps.
And hey, click that subscribe while you're at it so you don't miss the next deep dive. You can always change your mind later. Just remember, everything we talk about here is general market commentary and education. Okay, not specific trading advice for you. All right, let's unpack this messy day. We're pulling insights from the Grok Trade summary today to really understand the forces at play, those ongoing geopolitical worries, and some surprisingly strong economic numbers.
Right.
And home in on the technical levels that gave way, especially those we talked about yesterday.
Yeah, it was definitely a shift. Looking at the indices, the SPY that tracks the S&P 500 finished down 1.12%. And what's really notable, like you said, is it broke below that critical $600 support level we flagged yesterday.
That was key.
That support, it's basically a price floor where buyers have stepped in before.
Yeah.
Breaking it can signal more downside as possible.
Yeah, that $600 level was a big one. And the DIA tracking the Dow Industrials dropped even harder, down 1.77%, completely wiping out yesterday's small gain.
Right, showing that broad market weakness. The QQQ, which follows the NASDAQ 100, was down 1.26%. This kind of move amplifies that negative divergence we noted yesterday, where price was kind of pushing higher, but momentum indicators like RSI were starting to lag a bit.
Right. Often a warning sign.
It often is, yeah. A sign that upward strength might be fading.
So that divergence looks like it played out today.
Yeah.
And the small caps. IWM slid 1.81%, continuing that rejection at its 200-day moving average.
Yep.
That 200-day moving average, it's such a widely watched line, isn't it? Represents the average price over the last 200 days.
Exactly. And failing to get above it, like we warned about yesterday, can be a pretty bearish sign for that index. Respecting those key technical levels is just crucial on days like this.
Sure.
And in a risk-off session like today, where traders are selling riskier assets, well, we saw classic defensive plays outperform. Energy and consumer staples names held up relatively better.
Okay, yeah, makes sense. Speaking of key levels, one stock we're keeping a very close eye on is Apple, AAPL. It closed right on a significant daily trend line.
Oh, interesting. Yeah, this sets up a textbook technical test, doesn't it?
It really does.
Will the bulls step in to defend that trend line, which has historically supported the price? Or is this the setup for a breakdown, potentially signaling a larger move lower? It's a fascinating level to watch.
Definitely. Okay, shifting gears a bit to the economic side. We got the University of Michigan Consumer Sentiment Index today, and it came in much stronger than expected.
Yeah, it did. The forecast was, 53.6, but it hit 60.5, a pretty good jump from May's 52.2.
Wow.
And within that report, what was particularly interesting, I thought, was the drop in one-year inflation expectations, down significantly to 5.1% from 6.6%.
So stronger sentiment, lower inflation expectations.
Well, yeah, and this strengthened sentiment, surprisingly, it seemed to maybe add to the market uncertainty, perhaps pushing back expectations for Fed rate cuts, even while those geopolitical tensions from the Middle East were the more obvious driver of the risk-off mood today, kind of building on yesterday's hotter PPI data, too.
It just adds layers to the market puzzle, doesn't it? Now, all eyes are definitely on the Fed's meeting next week, June 17th and 18th, for any hints about rate policy going forward.
For sure. This sentiment report just adds another variable for the Fed to consider.
Okay, quick look at crypto and metals. Bitcoin dipped 0.55%, touching its 50-day moving average, another key line, right? Average price over the last 50 days.
That's right. It touched that 50-day level, just as we noted, and then actually rallied nearly 2% from it. So, we're cautiously bullish, watching if that level holds its support.
Okay, a bounce there. Gold, GLD, on the other hand, climbed 1.31% today, actually breaking above the horizontal resistance line of an ascending triangle pattern we've been tracking.
Yeah, and that breakout came with strong volume, which often signals that the move has conviction, could extend higher.
Good sign for gold bulls.
Meanwhile, silver, SLV, was pretty flat, down just a hair at 0.27%, continuing to consolidate near that $33 level just like we've observed.
Right. So Navigating volatile sessions like this, understanding why levels like SPY's $600 or IWM's 200-day moving average matter, and recognizing patterns like gold's ascending triangle breakout, it's all key, isn't it?
Absolutely.
It really highlights the importance of, well, risk management and having strategies tailored for days where the market shifts direction so quickly.
These are exactly the kinds of insights and practical techniques we go deep on in the Grok Trade Mentorship program. Learning to manage risk and adapt your approach in markets like this is paramount.
Got a stock you're watching, or maybe a question about the markets after a day like this? Drop it in the comments. We might cover it in an upcoming deep dive. And yeah, about the mentorship program, it's a serious approach. Our coaches have over 40 years of combined experience navigating markets, helping traders understand these critical levels and develop strategies that actually work for them.
The focus is squarely on risk management and developing a tailored approach that fits you. We're really committed to supporting you until you recoup your investment, providing actionable insights and guidance without that big impersonal brand cost. It's designed to help you trade with confidence, especially when markets get choppy like this.
So, wrapping up the day, we saw significant pullbacks across the main indices like the SPY, DIA, QQQ, and IWM, breaking some key technical levels we've been talking about.
Big moves.
Bitcoin tested and bounced off its 50-day, gold broke out on volume, and silver is just kind of consolidating. All influenced by those geopolitical tensions and that surprise strength in consumer sentiment.
Quite a mix.
Have a ticker you want us to break down in a future deep dive. Seriously, let us know in the comments. We love seeing what you're watching. So here's something to think about. What's your take on Apple's trendline test? Does that level hold, or do you think it cracks? And how do you think that consumer sentiment surprise really factors into the Fed's decision-making next week?